here is Daniel Arney, the member advocate expert at Gulf Winds. Welcome.
Hello guys, I don't have to ask you how you're doing. She already did that for me. So today we are going to, I'm going to speak on how to shop and finance a vehicle. I'm actually going to go ahead and tell you a story of how I bought my first vehicle. I just graduated high school. My parents moved to Washington, so I'm on my own. I just sold my car for $3,000 because I was embarrassed of it. And honestly, now I'm like, man, if my car gets me from point A to point B, I am thrilled. But I had no idea what I was doing. I had 2 credit cards. I had 2 slow payments, and we'll get to what slow payments are on my credit, and I just didn't know what to do. So my grandma said, well, okay, I'm not driving you around anymore, so we're gonna go buy a car. I said, oh, okay. Drove 2 or 3 cars, and I'm like, all right. I said, well, let's just go with this one. It's in my price range, and the guy goes, okay, well, do you have any money to put down? I'm like, yeah, I have money in my bank account. I can go grab it. It was like that little kid moment where my grandma takes me to the bank. All right, get the check. All right, fill it out. Whitmire Ford, I'll never forget the place. And we went back there, and I said, all right, I have $5,000 to put down on my car. And the guy goes, okay, we can go ahead and do that. We got to talking, and it turns out I knew this guy. He goes, oh yeah, Mary. Do you know Mary? And I go, yeah, that's actually my friend. He goes, that's my niece. I'm like, no way. He goes, I'm going to get you a good deal. Give me just a second. He goes back and goes, guess what? We got you approved. I'm like, awesome. And that is the story how I got my first car. I can't tell you the interest rate. I can't tell you the term. I can't tell you anything about it. So hopefully by the end of this, you guys will know your interest rates, your terms, and your payments when you leave. Let's see here. They wanted me to turn this on. All right, so like she said, I've been with Gulf Winds for 2 years. I moved here from Oklahoma. I graduated at Heartland a couple years ago, and my wife was in the nursing program at OU, and they messed up her nursing, so we transferred over to UWF, and she's going to be in the nursing program in a few months, so we're excited there. I am a member advocate at, obviously, Gulf Winds Credit Union. I've been there for 2 years, love it. I'm excited to teach people. I did get my bachelor's degree in theology, so speaking in front of people is kind of what I do. It's fun. I love to get the opportunity to speak to people about things they don't know about. And I am also currently enrolled at UWF, just taking a few classes, all online, but I do play pickleball, a few nights a week down there. There's always a ton of people there, so it's a lot of fun. But car shopping, it's exciting. You get to pick out your, the make and model of your car. Man, I want a Toyota, I want a Ford, a Chevy, and you get to pick really your car, and then you get to pick the model. Do you want an SUV? Do you want a compact SUV? Do you want a sedan? What is right for you? Because what is right for you might not be what is right for the person next to you. And then what color do I want? What trim package do I want? And the trim package would be like, basic, or do you want all the bells and whistles on your car? And does it match your personality and style? You don't want to, be driving up in a minivan to your friend's house. Like, hey guys, we'd all jump in and go on a road trip. No. But there's just so much to consider when we're thinking about buying a car. And this is the fun part of buying a car, but there's so much more that goes into buying a car rather than just this top layer. If we call it like an onion, I guess, when we're going to start peeling away the layers. So today's presentation, we're going to go through why and what we need to do to buy a car. So the first thing would be build a relationship, and then a credit score, and we're going to do our research on our car. And how many of you have bought a car? Or yeah, let's do that. How many of you have bought a car before? If I could get a show of hands. Okay, so we got a good amount of people. That's good. But the good thing is this is going to be applicable to you if you have not bought a car or if you're a first-time car buyer. It's going to be great. And then we're going to go through some shopping tips and finance options and knowing our terms when we go to the dealership. So a good relationship with your financial institution is a must. So this is what building a relationship is. And this is what I mean by building a relationship. It is going and starting a bank, whether if it's at Gulf Winds or, UW, Chase Bank, that's 150 miles away. But it's starting that relationship. And what I mean by starting that relationship, I mean direct deposits. So when you get a job, your paycheck goes, direct deposit right into your account, just goes in there. You don't have to worry about going to your work, getting a check and cashing it, and then putting it into your checking and savings account, and then having a positive cash flow. That means having that job, and that direct deposit gets deposited every 2 weeks or every week or once a month, and however often that you get paid. And by having this, it shows, we've had a job, we can see that you've had a job, how long you've had this job, and how much you get paid. And it's going into the checking account and how much you set aside for other things and other things of that. And the age of the account, that means how long have you been with us? Because sometimes we can see someone and we're like, you know what, this person has been with us 10 years and we want to do them a solid. So we're going to go ahead and do this loan for them, or, get them this car because we know that they're going to stick with us no matter what, thick or thin. And then just building that relationship. And it doesn't even, you can go in and have a personal relationship with a personal banker. So let's just say you walk in and you sign in at Gulf Winds and just for a new account, and then you get me. I'm like, hey, my name is Daniel. And what I want to do by the end of you opening that account is have that relationship with you, know you by name, know where you work, and know how I can better help you. Where your dreams and goals are. If you want to get a car, if you one day want to buy a house, I want to build that relationship with you. So when you're ready to make these big purchases in your life, you're like, you know what? I got a guy. Call me up. Hey, Daniel, I'm ready to buy my first car, or I'm ready to buy my first house. What are the next steps that I need to do? This is why building a relationship at a financial institution is a good thing, where nowadays you can go ahead and go on to Chime or something like that, where you don't have that personal connection with an actual person and they can't get you a loan. So what we want to do there is just help you press forward in your life. And then what else can a bank do for you besides deposit my money and get a debit card? There's so much more that we can do for you. Some products that most banks have are signature loans and share loans, secure loans, credit cards, secure credit cards, and business accounts. What? So a secured or a secure loan or a signature loan, for those of you who don't have credit, secure loans are absolutely a great way to start your credit. What it does is say, I wish I had credit, I don't know how to build it. What do I do? Save up $500, and then what we do is say, you know what, we can open you a credit card with $500 of your own money, and this will start building your credit. And we're going to start talking about credit in a little bit, but that's one really good way to start building your credit. And then another good way is even a secure loan, same thing. It just depends if you wanted your loan revolving, which means it never stops, so it just keeps going and going, or a signature loan, which a signature loan is a loan where you just put like $500 or $1,000 on, and then you pay about $10, $20 a month until it gets paid off. Either way, these both get reported to the credit bureau, and they help your credit score go up and up. Now, with our other products that we have, a good area right here is your credit score. And if you will all look through your papers, you will see right here, we have understanding your credit. Understanding your credit is a very important thing that we need to do, because this will determine lots of things. It'll determine our payments. It will determine our rates that we'll get on our car, and it will help us in the long run even save money with the better credits, with a better credit score. So some things that you might ask are, why our credit score is important. Do you guys know your credit score, or do you not have one? If you don't have one, it doesn't mean you have a bad credit score. It just means you don't have one. So what a credit score is, it's like a risk factor. It's like how likely or unlikely is someone going to pay their loan or debt back. So the credit score ranges from around 300 to 850. 850 is a perfect credit score. I have seen this probably like twice in my life with two people. I'm like, man, that is where I want to get. But that's just for my personal goals. But the perfect score, well, where I want to be around is right about 730 is like the sweet spot, 730, 750. That is where you'll get some of the best interest rates on your vehicles, and it will be where you get the lower payments because the interest rate isn't so high. So I've always learned that if you don't have a credit score, it's a ghost credit score because it's not a zero, because it's not really there, because they don't know if you are willing to pay your credit back. Which brings us into our next one, credit scores and our credit impact. How does this impact my total payment? And then the credit history and trade lines, what are those? And then we'll show you how to check, and when will checking cost points, and then opening trade lines, like I said, installments, which would be a signature loan, because it's going to be paid off, and a revolving, if you just think of it like a revolving door, it'll just keep going and going and going until you close it. And that's something like a credit card, where if you keep a credit card open, it's not going to close down unless you don't use it for years and years, and they'll eventually shut it down. But most of the time, they don't close credit cards, especially if you pay them all on time. They love you having them. But so how does, having a credit card impact my score? How does having a car loan impact my credit score? So the way they look at it, if you look at your paper, you'll see payment history. And payment history is 35% of your total weighted goal, let's just say. And this is saying, okay, how many on-time payments have you made on your credit card? Have you made any on-time payments? Were you late? How many days late were you? It's literally like this. We're only going to be able to get the top layer of this because we could spend hours talking about credit scores. But it is just saying what is your payment history? Are you making your payments on time? Are you making your payments late? How are you doing? And then it's amount owed. How much do you owe? This would be your debt to income, pretty much. Let's just say your credit card is $3,000 limit. Do you have it fully at $3,000? Are you literally capped out on it? Or are you staying right at 30%? 30% on a credit card is where they would like you to be. So if you have to carry a balance on a credit card, if you have 30%, it will be they're going to be perfect, let's go ahead and raise their credit. And also your credit score, you could see if you have Credit Karma, it might say, oh, you have a 730. And then you go to the bank and they're like, oh, you have a 710. And you're like, why is that? Why do I have a different credit score? Because this says it's higher and this says it's lower. We use different factors pretty much. Credit Karma could use a consumer credit score, so it just takes in just your consumer, not other bigger things. And then, so as long as you make on-time payments and you keep your credit cards at a low payment, about 30%, your credit will quickly jump. And I stress this, if you get nothing more out of this right here, this is what I want you guys to get. Make your payments on time, and even if it's the minimum payment, if your minimum payment is $25 or $30, you're like, oh, I can't do that. Make that $25 or $35 payment, because it will drop your credit score tremendously if you miss that payment. And then I have this happen, when you come in and say, oh, I want a car loan, I'm like, awesome. Do you have any derogatories? And derogatories would be late payments. Do you have any? They're like, oh, no, I don't. And I pull it, and they're like, oh, what happened? You're like, oh, I just forgot to pay it. And then what happens is they'd be a tier 1, which is really good credit. So let's just say they wanted a car payment for 36 months at 4.99. and they're just because they missed a payment, it drops them down to tier 2. And now they're at a 6.99 rather than a 4.99, which if we go ahead and meet Bob over here, Bob has a credit score of a 730. So Bob wants a car loan for 66 months and an interest rate of 4%. This would bring his monthly payments to $338.09. And the total cost of the car, $22,313.27. Okay, so when we mean the total cost, so that's after everything's all said and done. But now let's meet Nancy. Nancy wants the same car, same price tag. Nancy has a credit score of 599. Look at same amount of months, 66. Her interest rate, 18%. And her monthly payments, $479.42. Total cost, $31,641.35. That is a huge difference. We'll go back so we can just look at that one more time. There we go. So, that's almost about $10,000 difference just from having a credit score of 599 to a 730. And now, right there, look at right there. Nancy will pay almost $10,000 more for Bob for the same car and the same payments. This is over $100 a month. And so what we're saying is it not just $100 a month that she's paying? She's paying more because her interest rate is higher. And then when your interest rate is higher, obviously you're going to pay more on that. And so Bob got the better deal out of it, I'd say. Now, there are different types of credit. So different types of credit account for 10% of your credit score. But when you're going through a credit, bureaus like to see that you have different types of credit, not just credit cards. So they like seeing you have credit cards, you have a car loan that you paid off, and one day a mortgage. A mortgage is wonderful. Go get one, just kidding. But they like to see that you have different lines of credits and that you can pay off different lines of credits. Now, they're like, oh, okay, they can pay off a credit card at the same time as they can pay off a card. This is great. Your credit score is going to go up. They made on-time payments. Your credit score is going to go up. Your credit score keeps going up as you keep making on-time payments, as you open more trade lines like credit cards and auto loans and so on and so forth. And you keep those credit cards at a minimum of about 30% utilization. And then that's how we start building our credit score, is by a credit card or signature loan, secured loan, the things that we have already talked about. And right here is exactly what you guys are looking at. And they also look at their length of credit. They like to see, oh, look, you have 99, so that's as far out as the credit report will go, is 99 months on my credit. So if you look at my credit report, you say, oh, look, Daniel has a Chase credit card with 99 on-time payments. And, oh, Daniel has a Amazon credit card that has 2 missed payments on it. And then someone looks at my credit report and go, why do you have 2 missed payments? And I go, I didn't know how to pay it. So they report it, and when you make a missed payment, it stays, if you look at the paper, it stays on, well, it doesn't say it here, but it stays on your credit for about 7 to 10 years. So a mistake that you make early on in your credit will be carried with you for the next 10 years, and then it drops off, and then like it never happened. But if you look right there, it's also weighted, so you'll see that the last 12 months is the most important. So if you do make, a late payment and it's an accident, it's not the end of the world. After 12 months, it drops to 30, 20, and 10%. But like I said, if you get nothing out of this, do not miss a payment. Like, I don't care what you have to do, find a way to make that payment. Like, I promise you, you'll be thanking me in the future. Because right here, like I said, pay your bills on time, keep that utilization low or at 30% if you can handle it. Because I know we're all at different stages of life, you know, college, family, you know, still living with mom and dad. Hey, I wish I still could. Both my brothers do. It seems like a little bit easier life, but I don't know. And then, you know, reviewing your credit report, which you guys can go check. It's myannualcreditreport.com, and you can see what your credit score is, and you can see what is on your credit report. And you can see if you have any negative remarks or derogatory remarks on your credit, or if you have any credit at all. Now, this is where we start determining our budget and what we can afford. So now we know what our credit score is. We know that we needed to build a credit score. We know that we need to have a relationship with, we don't need to have one, but it'd be good to have a relationship with a bank so you have someone on your side when you go buy that car. We need to determine our budget and what we can afford. Because the last thing we need to do is go to a dealership and go, I want to get a Corvette. I want a $50,000, $70,000 Corvette. And then, payments are, you know, $750. So when we're determining our budget, we go through what bills do we have? Do we have, you know, my electric bill, my water bill? What are going to be my budget for school this semester? How much, you know, is it 7,000, 8,000? Do you get scholarships? But I sit down and I write all these things down, and I write what my income is. So then I minus my income from what payments that I have, you know, gas and, you know, maintenance on my car, oil changes and things like that. And then what I do is say, okay, what can I truly afford? I have an excess of, you know, $450 a month. So I would be comfortable at a payment of around $450 a month, right? But now if we're this is for first-time car buyers right here. When you go buy your car for the first time, you need to put down 10%. So with Gulf Winds, you'd have to put down 10% of your car. So if we did a $20,000 car, you'd have to put down 10% of that. So it's about $2,000. And then it doesn't cover right here. We can see down payments, tag, tax, and title fees. And then let's not forget the cost of insurance. And then, so depending on how much the car is that you buy, it's about around $2,000, $2,500 on like a $20,000 car. So what you're wanting to save up is about 20% of the car's value, right around there, and be willing to put that down on a car. And the cost of insurance, let's just see. To give you guys an example, when I moved here, insurance for a full coverage car and liability was $650. And that was a year and a half ago for 6 months. That's for a 6-month term. Today, they just sent me my quote. It's over $1,200. So in a year and a half, they've doubled their rates. Absolutely crazy, if you ask me. And I just said, what's the difference between a year and a half ago and now? And the lady said, honestly, it's inflation. I said, all right, inflation. That's great. Oh my God, I don't even know. But when you go ahead.
Is that just because moving from California to Florida? Is it Florida cost?
No. So when I got here, Florida cost, lived in an apartment, it was $650. That was for full coverage on one vehicle. And then, I mean, here, I'll blow your guys' minds this way too. My 2007 Nissan Altima cost just as much as my 2019 RAV4, and I only had liability on it. I didn't even have full coverage on it. Yeah, I was floored. I'm like, no way. But sometimes insurance companies do that to push you to get new cars. Because they go, look, if you get a new car, it's going to be less. The insurance will be less. Like, how that makes sense, I don't know, but I guess it drives the market. So what to do when you are looking for insurance on a car, I would call 4 or 5 insurance companies. Like, that's what I always do because I want to get the best rate. right here, if you're under 25 years old, I would try to get on the insurance with your parents. It will be cheaper for you. And then ask for discounts. So I get a student discount, I get a good driver discount. I pay my insurance 6 months in advance. They give me a discount for paying my full insurance in advance for 6 months. If you didn't know that, they will give you a discount for just about anything when you are asking them. And then what not to do, don't take the first quote you get, because if I did that, I'd be paying over $2,000 for my insurance for 6 months. Don't get tickets and accidents, and if you do, I don't know, I didn't look it up, but in California, if you got a speeding ticket, you could take a class and it would be wiped from your record. Yep, once a year. I think, so in California, it's once a year. Don't judge me. I know that because I have 7 speeding tickets in California. But don't give them the wrong car information too, because like I said, you give them the wrong car information, you could be getting charged more because it's an older car, or it's the wrong car, or it's a sports car. If you're under 25 driving a sports car, your insurance is going to skyrocket. And then don't buy more coverage than you need. If they're saying, get full coverage, it doesn't mean buy everything. It means, okay, so you need $10,000 for liability, just in case you hit someone else, $25,000 for yourself, and we could get into what kind of insurance you want on it, but just say you want to be fully protected with, low limits. It depends on where, again, it all depends on where you are at and what you want and what you can afford. But for these purposes, I always just say, I'm not worried about me driving, so give me the lowest liability full coverage liability that you have that will cover my car just in case I get in an accident. Now, before we're buying, we need to know our price range, and that's what we would do with that budgeting sheet that we gave you. You just go through and see what you could afford, and then knowing your cost of your insurance, because your insurance could be $600 a month, $600. Actually, I have seen that, $600 a month. But it can be $300 or $200, and that's something that you might have not budgeted for. Like, whoa, there's an extra $250 for my insurance that I have to pay monthly on top of my insurance, or on top of my car bill, and then maintenance on your vehicle. I was gonna do pros and cons on buying a new or used vehicle, but honestly, there's pros and cons for both, but I can't tell you what to buy new or used because I've bought both, and I have gotten really lucky with the vehicles I buy. I haven't bought a lemon. So a lemon is a car that you buy and doesn't work, and it's just a leaky bucket. You're putting money into it, Now, I would buy a used vehicle from someone I know that took care of it, and I knew what was happening. Because I've seen people go out and buy, $4,000 or $5,000 vehicle, didn't know the person, and then kaput, it's gone, it's done. And they're like, what do I do? It's gonna cost me $2,500 just for, the alternator, and that doesn't even include the parts of cost of labor. And now you're putting yourself in a hole, and most of us don't even have, $2,000, $3,000 to put down towards a car because, we're out of college and we're trying to, get an education so one day we can do that. So the next thing we'd probably want to do before we go car shopping is get pre-approved. Like I said, this is where your financial institution really comes into play, where your personal banker that that knows you, that you've built that relationship over the years comes into play. When you say, hey Daniel, I'm ready to buy this car. Let's see what we can get me approved for. And that's when I go, okay, let's go ahead and do that. If I'm on the phone with you, or if I am, if you're right in front of me, and we'll go through and we'll see what we can get you approved for. And so this is a first-time buyer's guideline. We need to be employed for at least 6 months. The max loan that we'll give a first-time car buyer is $25,000. With a cosigner, it can be $30,000. And so a cosigner can also, I verified this, can be, so if you guys are in college and if you're not in the same, living with your parents, you can still be a co-signer because you guys probably go home for the summertime and live with them. So that your parents can be co-signers on your loans for you, your car loan. Now, we will need proof of insurance. That's what POI is. And VOI is verification of income. So, like I said, where we could probably skip that step if you have a direct deposit with your financial institution. And right here, so we can also go out 72 months for you, and then we can push the payment out 45 days. So let's just say you're like, oh, I didn't realize insurance is gonna be $250. I need, an extra 15 days because I get paid every 2 weeks. We can go ahead and we can push that out for you. Because what we want to do is we don't want to give you a loan that you're not gonna be able to, make the payments on. We want you to be comfortable with what your payments are and be able to make it on time. So like I said, 10% down and then of the purchase price of the vehicle. So if let's just say the vehicle is worth $20,000, we won't exceed 90% LTV, and LTV means loan to value. So that's how much your car is worth. So if your car is worth $20,000, you'd have to put down $2,000, and then on top of that, you'd have to pay for the tax, tag, and title. And like I said, depending on the taxes and everything, it can vary about $2,000, $3,000. And then just some shopping tips. Drive a few cars in your price range. Don't drive one car and say, I love it. Drive, if you, let's just use a sedan, for instance. So let's say you drive a Nissan Altima, Chevy Cruze, and a Chevy Malibu. And you're like, so those are all about, the same cars, about the same range. And so this is what to never to say to a salesman. I love this car, I want it. He's gonna be like, perfect. You know what, we can't budge that as the price. Sorry. Always, when you go, keep your cards, it's like playing poker a little bit. You want to keep your cards close to your chest and not give them all out. And then don't say, I want my payments to be under $400, because they will get your payments to under $400. And they might push you out 75 months. They might push you out 84 months at 29.99%. I helped this guy, and I said, what can we do for you? He goes, I'm just here for a loan. I said, okay. Looked at his car loan. His car loan was at 29% interest. And paying 29.99% interest on $20,000, it's gonna literally never feel like you're gonna be able to pay that back. So I say, hey, let's go ahead and let's see what we can do for you. We ended up getting him down to 14.99% interest, and his payments changed from about $200. They went from $650 to about $448. And this guy was absolutely thrilled. He goes, no one ever even told me I had that. And when you come into my office and you open up an account, I try to go through your credit report with you, because it is very important to understand the importance of a credit score and how it can benefit each and every one of you. It can change your life from $250 in groceries to not. And so I was just happy that I was able to help this one member out and see what I can do for other people. And then here's some more shopping tips. Don't go alone. Don't go by yourself, especially if you're a first-time car buyer, because what happens is you get into that, let's just say, that Chevy Blazer, and it's top of the line, and you have all the bells and whistles, and you're like, I love it, let's go ahead and get it. And you go sit down and do all the financing. Well, we now lost our leverage, and you're probably going to pay the sticker price. I'll give you another example. It was 2019, right before COVID happened, right when COVID happened actually, and the dealership just brought in the RAV4 Hybrid. And the guy that I spoke to, his name I think was Tim, and he had sold 39 cars that month. And I was like, oh, we really like the RAV, but I think we're going to wait. It was the end of the month. And I was like, I think we're going to wait because I can get financed at my bank for 1.99%. And he was like, oh, are you sure? I'm like, yeah, I mean, we love the car, so we'll be back the beginning of next month to get it. He goes, wait, let me see what I can do for you. I said, I know I have a good credit score. I know I have like an 810 credit score. And he goes, okay. He comes back and goes, we can get you at 1.99%. And I said, I don't know. He goes, what's the holdup? I go, the price of the vehicle. It's just a little bit out of our price range. We wanted to stay within this. And he goes, okay, give me just a second. And he goes off and talks to the manager. He goes, I can't get you at it. And I look at my wife and I said, it's going to be your car. What do you want to do? She said, we don't want to budge. He goes back, and then he gets up within $250 of what we asked. He goes, what about this? I go, you got yourself a deal. So we were able to get the car that we want. So we got, let me put it this way. We got a letter from Bob Tyler saying that they would give us more for our car now than what we paid for it. It blows my mind. So and that's why I say, new or used, that's up to you, because right now you can buy some brand new cars cheaper than you can buy used cars, which blows my mind. I would have never have thought that you could have bought a new car cheaper than you could have bought a used car for, especially trucks. Just blows my mind. But like I said, don't go alone. Bring someone you trust, and don't be afraid to walk away from the deal. It might be the car you want, but I guarantee you there's other dealerships and other cars out there that you just haven't seen. I would go to multiple dealerships if I didn't like the salesperson that I was dealing with, because you don't want someone to be able to bully you or push you over and tell you what you need to do. And then one other thing, look at the buyer's order. The buyer's order is the sheet that they'll give you that shows you the breakdown of all the prices. And these might have extra products in them, gap, warranty, perm plate. Like what are all these words? Why am I getting all these fees? Some of these are beneficial for you, but some of them you might not need depending on how much you're putting down, or how much of a emergency savings account that you have. Right here. So what Gap does, let's just say you bought, a car for $25,000 and you drove it around for a few months and your car is worth, $20,000 now, and you get in an accident. You've only paid $1,000 towards your car. That leaves you a $4,000 difference. Guess what? You're still responsible for that $4,000, even though you don't have a car anymore. So how do you plan on paying that back? Now, not only is your car totaled, you owe $4,000, you don't have a car. So this is a wonderful product to have, is Gap, but look at the prices that you're paying for it, because I've seen someone sell Gap for $1,200, where I know we sell Gap for $549. So, and it does the same thing. So that's something to keep an eye out and look for, because I've had members come in and be like, oh yep, bought Gap and warranty, and I look at it, they're good for 50,000 miles. So warranty would be a mechanical breakdown protection, and this would be like if your alternator went out, or if anything else went out on your vehicle, or vehicles are very much electronic nowadays, and if I can fix something mechanical, but if something electronic goes out, that do not have the first clue of what to do. I'm like, I don't know. Like, when this didn't work, I'm like, what do I do? What do I do? I'm like, can't turn it on. So these little insignificant things that you think are insignificant. My little brother, here's another story. My little brother didn't know my gate lift was automatic, so he goes like this and rips it up and ruined the whole compression system on my lift gate. So now when I push the button, it just beeps at me, and I literally have to go like this and physically pull it down. To get it fixed, $2,500. Did you know what the warranty would have cost me? $2,200. It would have saved me money right there. But I say that to say is you just never know what you're buying. And the statistic, here we go, we like statistics. 1 in 3 cars has a mechanical problem. So are you chancing to get that 1 in 3 chance that your car has a problem? And then if it does have that problem, how do you plan on paying for it? This would give you a peace of mind knowing that if anything went wrong, that you have something to cover it. And if they have to keep your car, guess what? They will pay for a rental car for you for up to 4 days. So it's just having that peace of mind knowing that if you get in an accident and your car is not worth, if you're upside down in your car and it's not worth it, it's gonna get paid off. If something happens to your car and it breaks down, it's going to be paid for. And here we go. Life happens, right? My dad might have told me, I said, oh, do you see that accident? And he goes, yeah. I go, that didn't happen on purpose. He goes, yeah, because accidents don't happen on purpose. I'm like, oh, yeah, huh? That's why they're called accidents, because they don't happen on purpose. But we have other cool products like credit life and disability and involuntary unemployment. And what these are, if let's just say you're working and COVID happened, right? And you get laid off. If you work at a restaurant and you can't make your car payments, they'll make your car payments for 3 months for you. You don't have to worry about it. You can find a job within those 3 months. Or, if you get sick and you go to the hospital, or, you lose a limb, they'll make payments for you. They'll make those car payments for you. Or, we're not promised tomorrow. What if you pass away? Who's going to take care of that debt? Right here. This will cover up to $50,000. Just pay it off and nobody has to worry about anything. It gives you, like I said, that security and peace of mind, knowing that no one's going to have to look after you, and that everything is taken care of. We did go through a lot. If you guys have any questions.
Question, you talked quickly about the do's and don'ts of buying a car private sale from an individual, and if you do, how would you finance that? Would you have to do a signature loan rather than a traditional car loan?
Sure. Actually, we at Gulf Winds do private individual to individual loans. What you would do, you could come in and get pre-approved, or even go on our website and get pre-approved right there. And then you just say, well, I want to borrow $20,000. And so I put all your information in, or you put all your information in, and get approved. And then let's just say you find a car, out here on the UW parking lot, and you're like, oh, okay, this one's for sale, I want to get it. And then just come over to Gulf Winds, I'll put in the information in. Oh, there's something I didn't tell you guys. If you come see me, I will put in that VIN number, and I will tell you if you guys are getting a good deal on the car. Because one thing that I never even knew is that what is the value of my car that I'm buying anyway. Like, sure, the dealership's telling me that they're selling it for $25,000, and that's after tax, title tags, and everything. But my vehicle's only worth $20,000, so I'm already $5,000 upside down. Thank you, on my vehicle. But yes, individual to individual. Most banks do it. Super easy. You just come in, ask for an auto loan. We'll go ahead and put it all through. We put the vehicle in, and auto loans are always cheaper than signature loans, because you are putting your car up for collateral, where if you don't pay it, they can take it, but it's going to always have a lower interest rate than a signature loan.
And thank you, Daniel.